Welcome back to the stuff your accountant isn't telling you. Now, today we're talking about a business owner that has the potential to be very profitable, but she seems to be stuck in a loveless relationship and it is not helping her financially. And then after we talk about that, we're going to really try to figure out how we can help her and give her some advice that will make either the relationship better or help her move on from this relationship. And stick around for today's tax tea, all on today's episode. So without further ado, let me bring on the co-host, Lola. Welcome back to the show.
Thank you. Happy to be here. Hi, everyone.
Absolutely. It is good to be back. And I guess if you are listening, you probably recognize there is a little bit new theme music popping in the air. So, Lola, what was the inspiration for that theme music?
Some Afro beats and some funky soul.
Okay, I like it. I like it. I like it. So we are always innovating around here for the show. And one of the things that we are also innovating is changing up the style a little bit for the show, because one of the things that we realize is that people are struggling with so many different issues. And there was a business owner that reached out to me just to give a backstory for all those that are just joining us. Today, we're going to talk about a business owner who has the potential to have a great profitable business. One of the challenges she has is there's this loveless relationship she seems to be stuck in, and she's trying to figure out like how to even navigate it because it is impacting her business. Now, normally these relationships don't have the great impact, but this relationship is actually impacting her business, so she's not able to get the level of success that she should have. And part of that is because of this relationship. So our goal today, Lola, is to figure out how we can either help her fix the relationship or whether we are going to tell her, hey, it's time to move on. So are you ready for that?
I'm ready for that. Let's go.
Awesome. Awesome. Well, here, let me give the context. All right. So here's the situation. Business owner, she has a great product. She is excited about what she does. She has some good customer reviews. Now, there are some critical decisions she needs to make about, which products to continue selling. Like she needs to make some critical decisions on pricing. And she needs to make some critical decision about, some hiring decisions, some cost related things. Those are some critical decisions that she has to think through. Now, she has been kind of relying on this relationship that she has now. This relationship, I would say, it does seem a little dysfunctional. So maybe I'm biased in the way that I'm going to describe it. But
okay, go ahead.
I'm going to do my best. All right. So here's a relationship that she's been trying to rely on and getting help in navigating these decisions. So it's a person that she talks to maybe 3 times a year. When the person does tend to show up in her life, the conversation tends to be a little one-sided. And she doesn't really feel like the person actually understands what she's going through. But for some reason, she just feels stuck like, hey, this is the best I can do. I just have to deal with this. And that's the context of the relationship she's trying to navigate, while at the same time trying to be a CEO and run a successful business. Now, before I explain any more, what are your initial thoughts when you hear that description?
Sounds like a toxic relationship. Doesn't really sound like, and when you said it's one-sided in the sense of like she's the one doing all the talking or most of the talking when the conversations are had, or feeding into the conversation.
Well, based on the way she described it to me, it's like when this person shows up those 2 to 3 times a year, this person is always asking for something. And she always walks away with like homework assignments and stuff like that. And like, she's feel like she's being talked to, but not listened to.
Got it. Okay. Huh. Well, this is my take. My take is I think that relationship is probably time to reevaluate. I would say the first thing I think she needs to do is just understand, like kind of like go back and be like, what should this relationship look like in the first place? Because I think before you do that, it's kind of hard to assess, like, do you feel better or not? I mean, I'm certain. Do you want something different or not? I think without really understanding that, it's hard to determine, if it is a better. I'll speak for myself. This does not sound like a relationship I want to be in right off the bat. But I think it's
Awesome.
important, when you mentioned her staying, like, and just being like, she doesn't feel like she can do better. I think she needs to understand, like, what is it that she wants and compare it against what she's getting today.
Awesome. Well, without further ado, ladies and gentlemen, this is the description of an actual business owner and her relationship with her accountant. As
Mm,
she described it, this is exactly the situation she described. Now,
mm.
I would say for some people listening to this, probably when I was talking through it, they were probably thinking about, man, this is a horrible. She needs to hire a lawyer and get a divorce.
I mean, the 2 or 3 times a year, like, what are you doing? The showing up 2 or 3 times a year, like, where have you been, homie?
But the truth of the matter is, I mean, that's really how, unfortunately, I spent, over 2 years doing interviews with business owners. And when I would listen to how business owners would describe their relationship with their accountant, I mean, that would be a lot of the description. I mean,
Mm,
that is like the situation that was being described, to the point where I said, if I made a movie about an average or a general idea of what people describe to me when I asked them about their relationship with their accountant, like,
mhm,
you would think it is a relationship about someone that is stuck in an abusive relationship they can't really seem to get out of, but for some reason they feel like every year they have to put up with this. And so they're in this relationship, but they try to limit the amount of time that they actually see this person, because they know this is not going to be the most pleasant experience. And I'm like, as a business owner, that's not where you really want to be. I mean, that relationship should be very different.
yeah.
Now, I will say, what I want to do now is I want to take the perspective, since we know that this is the relationship with the accountant, and we provide bookkeeping and CFO services. And so I want to talk through this from the perspective of, hey, let's give some context on what might be causing some of the confusion, because you brought up, that there may be some, hey, we need to set the expectations properly.
Mhm.
Because maybe some of it is, hey, what she expected, what she's getting is not lining up. Some of that may be fixed with a discussion, and some of it might not be. So let's just talk from that perspective on expectations. When people think about an accountant, what are the things that you believe they expect should happen?
Hmm. I think tax preparation, I guess just to preface, I think when people talk about accountants, it's the word accountant is used so generally. Let me lead with that, to where it's kind of a blanket statement. And oftentimes that blanket statement includes bookkeepers, in some cases, CFOs, in some cases, tax accountants, in some cases, anyone that does anything related to numbers is just lumped into this accountant. I've even heard, like, people refer to, like, people that do, like, planning, like, investment planning, as accountants, and I'm like, okay, let's be clear on the definitions here. But generally, I would think, as a business owner, a couple of the things that come to people's minds when they think about accountants is taxes, bookkeeping, um, producing financial reports. Those are kind of the 3 things, right? So, like, the people that know your numbers, the people that give you tax advice, and the people that produce financial reports for you.
Awesome. So now, when it comes down to that, I totally agree with you. Is that there are a lot of people who the word accountant is just, I don't think it's something that they really understand. So
Right.
sometimes I think it's a word that they've heard before. They've heard someone say it. They've heard someone say that you need one. But what I also find interesting is, if you ask those same people, well, what do you need it for? Like, what do you use an
Mm,
accountant for? A lot of times they're like, you know what, if you need your taxes done, like, okay, that's one. What else do you need an accountant for? Well, if you have a question about, like, what type of entity you should pick and stuff like that, I'm like, well,
yeah.
actually, you need a lawyer for that. Because that's more of a legal question. Now, there are some tax implications, but you should probably talk to a lawyer more on that one. And as I go through it, I realize like most people don't really understand what an accountant does, and they don't understand that there are different types of accountants. So let's talk through that, because I think that's probably the best way to really set the expectation straight, is as we talk through the different types of accountants. So when you think about the types of accountants, what comes to mind, or how would you break out like the different types of, I guess you say, the different types of professionals that fall under the word accountant?
So I would break it out into maybe, let's say, 4 or 5 types. And just to keep it simple, I guess under the accountant umbrella, one of the things I want to preface with is, honestly, Terrell, I don't think we as an accounting profession have done a good job of like breaking down and simplifying what each of these people do. Part of it is because even within the accounting space, like, people have used these words simultaneously, which makes it even harder for you to know truly like what each person does. So if I was to break it down, I'd break it down into, like, let's say maybe 4 or 5 categories. So I would say, one, you have your bookkeeper, then you have your CPA, then you have your tax accountant, then your entrepreneurial accountant, or just a regular accountant. Actually, those are, I'll probably separate those. But entrepreneurial accountant, and then I'd say like a CFO would be next.
Okay, so you said bookkeeper, tax. What was your
Bookkeeper,
third one? How'd you word your third one?
bookkeeper, tax, entrepreneurial accountant,
Okay.
and CFO. I think I'm missing one
Okay.
more. Yeah.
Gotcha. Yeah. All
Hmm.
right. So the way I would probably look at it is bookkeeper, I agree with you on. Tax, accountant, which can be a CPA or an EA.
Yep.
And then I would say a controller, or which is pretty much just advanced bookkeeping, more advanced bookkeeping.
Yeah.
Not to put down controllers. I was a controller at once. I do some controllership work, but it's more advanced bookkeeping, more technical accounting. And then I would say a CFO. Now, CFO is definitely going to be more strategic in nature. And so those are the 4 areas I would break it down. So let's go back to the bookkeeping one. So we set the expectation right, because I do think what causes some problems in these relationships that business owners have with an accountant is they don't really know what type of accountant they're dealing with.
Hmm.
And since they don't know what type they're dealing with, they don't know what to expect from them. So if a person was talking to a bookkeeper, what should they expect from a bookkeeper from your perspective?
I would say, from a bookkeeper, expect that they should be able to give you a view on, they should be able to classify your transactions and basically give you a relatively accurate view on what your financials are. I think that's I would say the basic, right? So basically categorize your transactions, categorize your activity for your business based on what you've defined with them your account should look like, hey, this is how my business works, these are the transactions I have coming in and out, and then they should be able to take that information you provide and classify what those transactions look like and turn around and give you a financial statement of what your business is doing. That would be what I would say the basic, that's what at a minimum a bookkeeper should be able to give you.
Gotcha. Gotcha. So
Agree,
I guess when
disagree? I'm like,
um
because
I
this is
would say, I mean, I think that I think you captured a lot of it. I mean, I think from one aspect, the way I put it is, I agree with you. Whatever your accounting system is, they're doing the classifications, they're reconciling the bank accounts, your credit cards, and any debt accounts, so that you can run, like, you can get a view of your financial statement. So you can look at your income statement or your balance sheet and it makes sense.
Mhm.
So another thing that I think that may fall under what a bookkeeper is, that they're also supporting, like, let's say if you open up a new bank account, or let's say you open up a new credit card, they're making sure that that information also flows over to your accounting system. And the reason why I bring that up is because I've seen many business owners where they open up a new bank account and the bookkeeper they were working with has never asked about it. Like it never came up in discussion. And I would say is for the business owner, they may not necessarily be thinking like, oh, I open a new bank account, so I need to make sure that I add it to my QuickBooks. But that's the bookkeeper's job to remind them or to bring up stuff like that.
Yeah.
And then I would say the last one that I think is very important is that I think a bookkeeper should be doing is bookkeeper should be proactively communicating with the business owner's tax preparer to be able to tell them, hey, here's where the financials are so far, and kind of encouraging that tax preparer to provide the business owner with more proactive tax advice. So that would probably be the only one I would add to your list.
That's fair. I mean, I think it ultimately comes down to being able to do what is needed to I would, if I was to summarize it, a bookkeeper should be able to do what is needed to give you an accurate set of financial statements on a frequent basis. And that
Yes.
includes the banks making sure all of your activities related to your business are included in financial statement, and making sure, hey, they have these financial statements updated so that you can share that information, or they can share that information with your tax accountant.
Yes. And I also think it is the bookkeeper's responsibility is that if the complexity of your business grows beyond their skill set, it is the bookkeeper's responsibility to either let the client know so the client can find someone else to support their business, or for them to actually go out and get the support on their team or get the contractor so that they can provide that. Because I've seen that many times where there's a business owner whose business has grown, it's gotten a little bit more complex than what that bookkeeper can handle, and instead of being honest with the client, they just kept trying to support the client, and they actually ended up messing things up, which had a negative impact for the business owner. Where I'm like, that bookkeeper should have raised their hand and been honest with you to say, hey, this business has grown past my capabilities.
Yeah, I think that's fair. I would actually say I would tell a business owner not to expect that from their bookkeeper though. I mean, I know that it should be performed, and I know that's what the expectation is, but as a business owner, if your business is starting to grow, this is how I would look at it. I think a bookkeeper is for a business that is in growing, right? You're kind of you're in business for maybe 2, 3, 4, 5 years, whatever. Your business is relatively simple. There's no complexities to your process. A bookkeeper is great for that. Get it done, reconcile it, get you the financials. But when your business starts to get a little bit trickier, and if you find yourself as a business owner asking questions that are more strategic, or asking questions that are a bit more technical, and you don't find that you're getting the right answer or any sort of answer from your bookkeeper, then that should be a hint, in my opinion, that it's probably time to upgrade your plan and find another relationship because you have outgrown your bookkeeper. So that's a tip on that.
I can see that, and I do think to explore that a little bit more. I'm gonna skip over. I'm gonna come back to the tax person because I do think that's where the controller type accountant comes in. So we'll revisit the tax person, but I do think as the complexity increases, for example, you're a real estate company and you have, you know, three different entities that are have different levels of ownership and they're owned by other entities. There's just layers of entity ownership structures, and you need more complete financial statements and consolidations. Like a basic bookkeeper is not going to understand that. That's where you do need the support of someone like a controller to come in, someone that has a bit more advanced knowledge of the technical expertise. Now, that controller may be a person who has a CPA license, or it may be a person who just has more extensive experience within that industry to help you navigate the business transaction. So, what are your initial thoughts on a controller?
I think my initial thoughts are no one. I haven't seen anybody in the business owner space use the word controller. Like for me, controller sounds like something that we used to do in corporate. But I think the word controller really is, like you said, Terrell, just more of that technical expertise, which again, is a blanket statement where people are like, oh, I have an accountant. Usually, like you said, an accountant or the controller can be a CPA. Sometimes they're not. But if you are looking for that complexity where it's like, okay, how do I, for example, if you're, let's say you're going from, cash to accrual basis where you're trying to kind of understand, hey, how you recognize revenue or how do you properly categorize stuff on your balance sheet or how do you account for those type of transactions? Like a controller or someone who is, a controller should be able to answer those questions and say, hey, based on this accounting rule, this is how we handle it, right? So if you're looking for more of that technical support, I think definitely you need to upgrade to someone who has that technical skill to help support your business.
Absolutely, I agree. And one of the things that's interesting for a lot of small business owners is most people may just think about small business owners in the context of getting their tax return done, but I don't think most people realize, like, as a small business, sometimes when you're going for larger loan amounts, like, you need
Mhm.
your balance sheet. And what I have seen is your average bookkeeper does not really understand balance sheet accounting. That's where you're looking for someone a little bit more technical, someone who does have a little bit more controllership experience or exposure. Because when it comes down to trying to get a loan, your balance sheet is going to be a big part of the story that the business is looking at to see,
Mhm.
hey, whether that bank is going to actually say, hey, you have enough assets here to cover this loan, or this looks like a good decision. So I do think that that is, as you grow and that complexity, and as you want to do things like bring on investors or take on debt funding and stuff like that at a higher level, I'd say probably if you're trying to take on more than I'd say $1 million in debt, you're probably going to need a controller to really help you navigate that.
Yeah, that's a good
Now, I
point.
want to circle back to the tax preparer or the tax professional. So this is the third type of accountant that falls under this title of accountant. So when you think about the tax professional, what are your thoughts there?
I mean, I think a tax professional is obvious in the title. The tax accountant or tax professional is there to help you prepare your taxes. Now, one of the areas that I will say that is often overlooked, but I think should be expected from a tax accountant is someone who is going to give you the insight that you need throughout the year on how to maximize your tax situation in your business, right? Because a lot of these tax incentives that are given by the state or by the government, by the federal government on the federal level, like as a business owner, you don't really know what's going on, right? So that's where you kind of lean on the corporation or collaboration between your bookkeeper or the person that's preparing your financials and your tax accountant or your tax professional, because that's kind of where they have a conversation to say, okay, this is what the financials look like year to date. And then your tax professional or accountant can then come back and say, okay, based on this information, here's what I recommend that you do, or here's what I recommend that you don't do. So I think that's something that's overlooked, but I think that's something that's important.
Absolutely. I think this one is probably the one that most people think about when it comes down to the word accountant. And I think the reason why most people probably think about the tax professional is because it's probably the easiest one to explain. Because, I mean, like you said, it's very straightforward. The
Yeah.
tax professional does that. They focus on helping you with your taxes. Now, one of the things that a lot of business owners are a little, confused about is when they start a business, they don't realize that prior to you starting a business, you really didn't know about most of the taxes that now impact you as a business. Because as a business owner, now you have, income tax, which you had as an individual, but now you also have, maybe corporate tax. Now you also may have property tax impacts related that are specific to your business, or you have self employment tax, depending on how your business is structured, or you have payroll taxes or sales and use taxes, to where tax within itself can be a broad topic. So I
Mhm.
always tell people is that, whoever your tax preparer is, a lot of times what I would do is just say, hey, here are the 8 types of taxes that you need to be aware of as a business owner. When you talk to your tax preparer, just share this list with them and ask them, hey, is my business okay as it relates to all 8 of these, or which 8 apply and which don't? Because I do think that there's a big difference between a tax professional and a person who bought QuickBooks and does taxes on the side once a year to make some extra money. And I think that a lot of people aren't understanding
Listen,
that there's a difference between those two people.
I'm just gonna also say that, and I think that's why I was literally to use the word tax professional, because I think tax professional is just such a loose term, because like you said, it's a blanket statement for people who from people whose grandparents are doing their taxes in their basement, to all the way to someone that works at H&R Block, all the way to someone that owns a CPA tax practice. Like, tax professional is such a widely used term. I always advise business owners, even people that have approached me when they want to talk about taxes. I'm like, guys, if your business is at a point where it is growing, like even for us, like one of the things that we had to recently decide is we are done doing our own taxes because as the business grows, we need that, not that we didn't have someone giving us advice, but we need that dedicated support, because as your business starts to grow, you need that expertise. So don't continue to use grandpa's QuickBooks taxes in the basement when your business is doing $2 million, because you're just like, you know what, that's the way I've always done it. I promise you that is not a good idea, because there's a lot of things like Terrell, you mentioned, where like as your business grows, there's certain complexities like payroll tax, all of those things that you need to navigate. Because what we always seem to find out is when we do this tax tea episodes, is someone forgot to pay payroll taxes, someone forgot to do this. So you always want to make sure that you have a tax expert that is behind you checking your tax related items, because I think that's important. So that's my take on that.
Yes, absolutely. And I will say is QuickBooks has gotten a lot of attention in the news lately because of FTX. I will say is no offense against
I
QuickBooks.
forgot about that.
I do want people to know that QuickBooks is a great product. A lot of our clients are using QuickBooks. Now, when it
Yeah.
comes down to the tax software, what I don't think people understand is that QuickBooks has levels of tax software. So
Hmm.
if a person is using TurboTax, it's really designed for personal individual use.
Hmm.
Now, the other types of tax software they have, like ProConnect, that is the professional version.
Hmm.
And I've had some clients where I mean, as a CPA, I've done a couple tax returns in, they're more advanced. And it is a night and day difference between the professional version of tax preparation software and TurboTax. TurboTax, I think, is great for individuals. And it's also made by Intuit, the company that owns QuickBooks. But then there are also some other more advanced versions. And so I always tell people is, let's say if you're working with someone to do your taxes, and let's say they don't have their own firm, you don't know if they're a tax professional, what you can do is ask them like, hey, what software do you use? If they say like QuickBooks or something that you can buy out of the store yourself, then this isn't like a professional thing that they do. um because I
Listen,
don't think people realize that, like, as a professional tax preparer, like, you're not allowed to use like, TurboTax. Like, that's not a professional version of doing tax returns.
I also
Because
want to, yeah, I was going to say, I also want to say, usually, like, there's that preparer tax ID number that people have. So like if that person doesn't have a tax preparer ID number and they're just like doing it like in your name and just submitting it, and there's no like sort of like them putting their name on this to say, okay, fine, like I'm signing this off as, hey, your tax preparer, whatever, like that's a little bit dicey. Like I would probably have some questions in that situation.
absolutely, absolutely. Now, I will say is, because most people think about the tax professional, you know, that's where I think this person in their relationship is like, it sounds like they were really dealing with a tax professional and not all these other ones. But
Hmm.
before we give her, this business owner, kind of our prescription and our thoughts on that, the last one I want to cover is the CFO. So when you hear CFO, in which you're hearing this a lot, these days
Oh my
of
gosh,
like,
yeah.
oh, well, we're a fractional CFO. And what's very funny is people often ask us about that because we provide bookkeeping and CFO services. We don't do taxes. We don't do a little bit of everything. We do bookkeeping and CFO services, and we tend to focus on a specific type of businesses in the service sector. So I'm curious as to what your initial thoughts are about a CFO, and what has been your opinion about what you usually hear other
Listen,
people define as CFOs.
listen, let me tell you something. My initial thought, which is not really initial because I've had a lot of time to think about this, but my initial thought is on this, and my perspective is I would tell, our business owner friend here. If I was to define what a CFO is, I would say, think about your you being on a journey. And this is something we love to talk about here on the biz on at the Business Talk Library TL Turner Group. Think about you being on a journey. I would say a bookkeeper is like a GPS on your phone on that journey. Like, they're not there with you. You kind of have to figure it out by yourself. And if you get lost, listen, that GPS is done. If you get lost, it can't really like help you recalibrate as much. You don't have the guidance. Or actually, I'll say it this way. Think of your bookkeeper as a map. You have to read the map. They give you the map, you have to read the map, you have to understand what's going on. Whereas your CFO, I would say, is someone that's in the car with you and is helping give you active feedback as you're basically navigating the journey of this point A to point B. So I would say for me, a CFO is someone who is beside you and almost a partner in your business, offering you kind of like, all right, if you're trying to, let's say, if you're trying to raise capital, as an example, hey, these are the things you need to consider. If you are trying to borrow a loan, hey, these are the 6 things you need to do. Or, hey, how do we put together the financials to make a stronger case? Like, if you're trying to grow, if you're trying to open a new location, hey, let's put together analysis to figure out, hey, do we have enough cash flow to do this? Do we have enough cash flow to sustain the business? So from my perspective, I always like to equate CFO to someone who's a partner in your business, whereas a bookkeeper or an accountant is really just there to provide the information, but it's really up to you to interpret it. Whereas the CFO is your partner to come in and say, hey, based on based on what's happening with these numbers, like, this is what I think we should do. And that's a very big difference. And what I've seen today is a lot of people call themselves a fractional CFO firm, but they're basically just a glorified bookkeeper, to where they're doing the exact same thing that a bookkeeper is doing, but they're just charging you 20, 15, 10 grand more than you would pay for a regular bookkeeper. Because at the end of the day, I would consider a CFO to be a business partner more than just a reporter.
Yeah, no, I think you're onto something really good with that analogy because even as you started talking, and I know you switched from GPS to map, but I think there is something there because even
Yeah.
as you were talking, what I was thinking was a basic bookkeeper is like a map. And when I
Yeah.
started driving, it was before smartphones. It was either MapQuest or you actually had to buy a map and you had to read the map. Like, it gave you some general guidance, but
Hmm.
it wasn't going to be interactive.
Yeah.
And
Oh,
it
that's
gave you
good.
some guidance. And as long as you stayed on their exact path, or as
Hmm.
long as there were no detours in the road, you could follow those MapQuest directions. But if there was a
Hmm.
detour in the road or something happened unexpected, like the MapQuest instructions were not the greatest to keep following. And then I do think there are some bookkeepers out there who are a little bit more engaged. And I would say they're kind of like a GPS
Yeah.
where they're giving you some updates on, like, hey, what's happening. They're taking into account, where your current location is, trying to help get you back on track and stuff like that. And then I do agree with you. I think a CFO is like someone who's in the car because, it is very different from when you're driving at 8 o'clock in the morning versus when you are driving at 11 o'clock at night,
Hmm.
because that GPS isn't going to take into account how tired you are as a driver. But
Yeah.
I do think a CFO is going to check those type of temperatures to understand, like, hey, yeah, the numbers say we can do X, Y, and Z, and this is how much money we'll make. But I also need to check on you. Like, do you have the drive, the energy? Like, hey, if you've been working, let's say nonstop for 9 months with no vacation, you might not have the energy to go push and drive for another 6 months. Like, you might need to take some time off before we execute this plan. And I think if you're looking at a GPS isn't normally going to tell you, hey, you need to stop and take a nap. Or the GPS isn't going to tell you, like, hey, you need to stop and get gas. Whereas a person who's in the car with you, when the little red gas light comes on, they can look over and say, hey, we should probably stop and get some gas. Like,
Mm.
we can get back on the road after we get some gas. And I do think your analogy about the CFO, I believe it's the same. It's a person who's in the business with you as a partner, where they're looking at the things that are happening on your financial dashboard, and they're giving you warning signs. They're giving you heads up, and they're saying, like, hey, I know we wanted to get there by XYZ date. We wanted to get there by June. But based on the fact that we need to hire 3 people and we had to deal with this unexpected situation, maybe our goal should be to get there by August instead of June, because we need to make some adjustments and some changes. And I think a lot of people don't understand that about a CFO, is that they're there to take your business into account, your goal into account, the numbers in the account, and then to help you develop an effective strategy, I think, kind of to close that gap on that.
That's really good. Look at this. We make such a really good team. I started it and you wrapped it up. And that was really good, actually. I think that basic bookkeeper, because initially when I was saying it, I was like, I think I'm setting wrong expectations, because somebody might start thinking, like, man, if you're a GPS, like, you need to be talking to me at least. You need to be letting me know what's going on. But actually, that's a really good point, because I will say there are bookkeepers who are a bit more proactive and who do give that
Yeah.
guidance. But like you said, like, they don't know, like, they can't really read the signs, or they're not, putting time into reading the signs, which in reality, I feel like as a basic bookkeeper, or just as a bookkeeper, they shouldn't be, because you're not paying them to do that. But I think as a CFO, absolutely, like, yes, I read the signs. I kind of know when you need to slow down. I see, hey, this is what you're saying your goal is. This is what the numbers are saying. This is kind of where, this is where our strategy is. Like, hey, we need to pivot based on what you're saying, because based on our strategy and our numbers, it doesn't add up. And I think that is actually, for me, the best part of having a CFO is they can look at both sides of the business. They should be looking at both sides of the business. Like, they should be connecting the dots between the operational side. And I think for me, this is why I've really loved my past CFO roles, because it's really required me to be, like, on my feet about what's going on in the business operationally, and then be able to connect the dots on the financial side. Because if you're telling me, hey, we're trying to bring in more sales, but I'm also trying to make sure that I maintain a margin and I walk away with at least, let's say, 15% of margin in my business, then I'm going to say, hey, based on what you're telling me, you're selling the wrong products. Like, you need to go sell more of X. Based on this analysis, you need to go sell more of X, or to hit this number, you need to sell, X, Y, Z, and you need to sell it by this timeline for us to achieve the goal. Whereas usually you won't get that level of support from a bookkeeper. So I would say, like, if you're really looking at, like, a CFO, is that person on the journey with you, and are they giving you the insight that you need to kind of make those key critical decisions?
Absolutely. I mean, and I think that for a lot of people, they don't realize is that there are needs for different types of accountants at different stages of your business. There are a
Exactly.
lot of businesses, because although we offer bookkeeping, we do a lot of, advisory bookkeeping. Like, we're
Mhm.
more like the GPS in some of those cases. Now, there are some clients that we are just a map for them,
Mhm.
where we do all the bookkeeping steps of reconciling bank accounts. We produce the financial statements. We send them the financial statements, and they are good, because that's what they need at this point. Because
Yep.
they're not headed to a very complex destination. And that's what they need at that point. Now, there are other clients whose businesses have grown a bit more, and they're a bit more advanced, and they're, around or above $1 million in revenue, where they need a little bit more advice. They don't necessarily need a CFO yet, but they do need us to be a little bit more interactive with the information that we're sharing. So in that case, we're kind of like the GPS where we're telling them like, hey, based on what the numbers are showing, based on the situation and all these factors, here's where I think you should go. And we're
Mm-hmm.
providing some of that advice. And then there are some other clients who they're a bit more advanced and complex. They're trying to figure out things like, hey, we want to introduce a new product. What price should we put on it? Or they're like, hey, we want to buy another business. Like, what should we bid for this? Or, hey, we eventually want to sell this part of our business. How should we position that to sell it? Or even like, hey, we want to, bring on an entirely new product line or transform this and change our entire business model. Like for stuff like that, it's just like, all right, you're headed to a complex destination. You need a guide who's going to be in the car with you. So I do think for the expectation for people is that those roles can vary. Now,
Mm-hmm.
the last part of the expectation I want to go through is talking about pricing, because that's another thing. Like I always tell people is don't expect to have a guide in the car with you and you're willing to pay only for a map. Like those are two different things.
Important. This is so important. And I think like I'm excited we're talking about it today. Because I think that this is something that a lot of accountants, which again, our show is stuff your accountant isn't telling you, stuff that accountants shy away from, because I think they feel like it boxes them into like, if I tell you my price, like, you know, are you gonna box me into it? Like, and just for guidance, like as we talk about this, like I just want the audience to know these are ballparks because each business is different. I think for basic bookkeeping, it's usually relatively straightforward, but like we've cleared and we've talked about, like as you progress in that journey and as your journey becomes tougher and more complex, the type of support you need may vary. So we're giving ranges, but it's not, I guess don't take this and be like, well, Terrell and Lola said you need to charge me this. No, this is a range, and we're really doing it because we want to give business owners the visibility to be able to understand based on where you are in your business and based on what you can afford. Like, hey, are you ready to get a GPS in the car, or are you ready to hire a actual guide that sits with you and takes that journey with you and can kind of be that pulse check for you?
Absolutely, absolutely. And I always tell people is that, when it comes down to pricing, we're a bit more open than probably most accounting firms. Like you go to some of the biggest accounting firms, everything is, hey, by request only.
Right.
And I think even just giving people like, hey, starting ranges, because sometimes, there are some factors that I think that do depend.
Okay.
There are some factors that I think that, you know, the complexity of your business. For example, like we work with law firms, and what
Mm-hmm.
I would say, law firms hiring us to do bookkeeping is probably going to start somewhere around $800 a month and up, depending on the complexity, because there are some unique things related to accounting for law firms. So it's probably going to start at $800 and on up for a law firm.
Mm-hmm.
That's just for bookkeeping. Now, for other businesses that are not law firms, which we do have a couple of businesses that are non-law firms, for just bookkeeping, like you just want us to do the bookkeeping and send you the reports, and
You want a map.
hey, maybe we answer a question every now and then. But if you're just getting the base package, like, and we don't do this a lot. For some of those businesses, we may do that for, let's say, $600 a month, whatever. But we don't do that a lot. Like, actually, there is an internal metric that we monitor that limits the number of clients we take on at that level. Because one is, with our business, I mean, we are, the stuff we focus on are more between advanced bookkeeper and CFO, to where we're not the right fit for every firm. And I always tell clients that when I'm talking to them, like, we are not the cheapest firm in the industry. We are not the most expensive firm in the industry. But here's what we do. We charge this price because we are really good at what we do. Now, if you can go find someone else that fits into your budget, here's what you should expect from them based on what you're willing to pay. And I do give people that advice. And there have been some people who come to us and then they end up going elsewhere because I'm like, hey, I'm not going to hide the ball with you. Here's what the price is. Here's what you can expect from us. And here's what we're going to deliver. Um, and I think once you start getting into a bit more advanced accounting, I think your pricing, you start getting north of like $1,500 a month once you get into like kind of controllership, more advanced account. Now, it depends on what level of advanced accounting do you need? Like, are you trying to transition from cash to accrual basis, or you're trying to get ready? Like, you're trying to, secure a $5 million loan. So you need to do some deep accounting. And so that type of stuff, I mean, you're going to pay more for that. And I think once you get into like true CFO services, I think you're north of minimum 2,500 a month. Now, it could be as much as 8 grand, as from what I've seen and talking to other firms. But I think that does give people a better idea on, hey, the type. So let's say starting at 6 to 800 if you're just looking for the basic bookkeeper. You're looking around, probably north of 1,000, north of 1,500 if you're looking for a controller. And then if you're looking for a CFO, you're looking more than 2,500 a month for a CFO. And depending on how engaged you want them to be, or how easily you want it to be when you pick up the phone and call them, you're just going to have to pay more money if you want to talk to them more.
Yeah. No, I think that's good. And I think just to, as you mentioned, those phases, I always tell business owners, like, you don't need all the fancy bells and whistles now. Like, we're gonna go back and like emphasizing on the journey. If you're just starting out, you don't need a CFO. I mean, hey, maybe it depends on the business that you're working on. Okay. Maybe let's say you're branching out, you're launching a, I don't know, $5-10 million business. Like, hey, you've already started. That's a different story. But I'm saying if you're just starting your business, you don't need a CFO from my perspective. You just need someone to get you to set you, maybe pay for a bookkeeping consult. We do a lot of this for some of our clients who are I just want to make sure that I'm doing my bookkeeping correctly, or bookkeeping assessment. Sorry. Just, okay, chart of accounts set up. I just want to make sure that I'm doing things correctly. Pay for that to kind of get you set up correctly. And then whether it's you doing your own bookkeeping, or you bringing and paying someone like $600 a month when you can afford it to do that. Then as your business starts to grow, then like Terrell, you mentioned, is like, all right, as your business starts to grow, then you can bring on just a basic bookkeeper, or a bookkeeper that's a little bit more proactive. Then when your business starts to get a bit more complex, like you're thinking about opening a new location or those kind of things, it's probably time to bring in someone like someone that's a bit more tenured, or for some complex transactions, a controller. And then as your business grows, which we always want businesses to grow, then you bring in a CFO eventually. But don't always feel like you have to start off with a CFO, because a lot of times you're not really going to get the value that you can and should have access to, because your business just isn't really at the right place. If you're going from, and I think going back to the car example, right, Terrell, like if you're traveling from here to the gas station, you don't need someone in the car to give you directions. You don't. You just need to make sure, hey, where am I going? All right, you need to make it to the gas station. Cool. All right, give me the guidance. I'll make sure I'm headed in the right direction. Is it a left or right? It's a left. Keep straight down. It's relatively straightforward, and you're there. So, just some guidance on that. Terrell, anything else you want to add?
Yeah, I would say. I mean, I think your point is really good. I mean, it's so good. I wanted to add it to the screen at the bottom so people can see. It's like, because I think that's a you know that is a very important part. I
Yeah.
mean, if you're just getting started, or you just got started, then a bookkeeping assessment, I think, is very important. And what I mean by like a bookkeeping assessment is, you're gonna sit with someone who understands bookkeeping. They can help you, like I said, connect all the bank accounts, the credit cards, make sure you set it up properly, and then give you some guidance on how to do it yourself. Because when you're just starting off, you're trying to conserve as much cash as you can, and only put that cash with, growing the business. And that makes sense. And then I think as you grow, then it may be getting to the point of like, hey, we've grown a little bit to where, hey, we're doing more than, 15,000 a month in revenue. Like, now it might be time for you to look at getting a bookkeeper because you need to spend less time doing this back end administrative thing. You need to be focused more on growing the business. So
Right.
hire a bookkeeper that can do the bookkeeping in the background and provide you with some support. And then, of course, as you start growing past, I would say, kind of that 25, 30 grand a month, then your bookkeeper can probably be a little bit more advanced because you're going to start thinking about some decisions that
Hmm.
you need to take the numbers into account. So,
Right.
I mean, I do think as your business evolves, the nature of your relationship should evolve. And now back to, like I said, our business owner that seemed to be stuck in a loveless relationship. I honestly, and this is what I told her, is I was like, I think part of the problem is how you approach this relationship. Because if you're working with a tax accountant, in which they only had a tax accountant. But I'm
Mm,
like, your tax accountant, the nature of their relationship is to only talk to you maybe 4 times a year at most.
right.
They're going to talk to you about specifically about taxes. They're going to ask you a bunch of questions. They're going to answer a couple of questions that you have. But as a business owner, most of your questions when it comes down to your finances are not going to be about taxes. Most of your questions are going to be more about like the decisions that you need to make. You will have
Right.
some tax questions. And so what I told her is what this sounds like is your accountant, one is they're not going to talk to you multiple times throughout the year. Now, what I will say is they should be honest enough with you to tell you that. They
Hmm.
should be honest enough to tell you, like, hey, here's what I do as your tax accountant, and these type of other things. Maybe you should look at working with someone else. Now, in this business owner specific situation, the issue was their tax accountant was telling them, hey, we can do your bookkeeping, and it just wasn't happening. So
Mm,
I was just like, yeah, that's a strike against your tax account. They should not have told you that they can also do your bookkeeping if they weren't going to keep up with it. And so I always tell people is what is it that you want? Like back to what you said, what do you want out of this relationship?
right.
Do you want regular sets of financial statements like on a monthly, quarterly basis? Like, then you need to talk to a bookkeeper. Do you want advice about how to make a couple of just decisions here and there? Then maybe an advanced, experienced bookkeeper who knows about running a business can actually provide some insight. Do you have a tax question? Well, then you need a relationship with a tax preparer. Now, do you have strategic questions about, hey, how do we improve our cash flow to make sure we can finance the growth that we're experiencing? Or, hey, how do we secure a loan? Or how do we come up with new pricing? Then you need a relationship with a CFO. Because if you're expecting your basic bookkeeper to do what a tax preparer should do, you're already going to have conflict in that relationship. And so I always tell people is like you were saying, Lola, get the expectation right and then make sure you're going to the right type of accountant with the issues that they can actually help you with.
Yeah, that's good. One thing I did want to say also is a lot of companies are like ours where they offer a variety of services. So I think for the business owner that we were working with and talking to, like the reason why we advised her to focus on understanding what her expectations were is because clearly like this person wasn't able to meet some of the things that she felt like she needed, right? Because to your point, that tax accountant was their job is to talk to you 2 to 3 times, maybe 4 times a year. But I think what I would say is it's always good to be communicate and to be honest and transparent about, okay, you know, I feel like for example, for us, we've had conversations with clients where when they came in, they just needed basic bookkeeping. And then as their business grew, they needed more support because hey, they wanted to open a second location, there were more complexities. And one of the things that we worked out is, hey, we'll have a conversation when the time comes, and then if you need additional support, we can always do that at an extra price. So don't feel like, you need to box yourself in. I would say if you want to stay in this relationship, going back to to our client or to this business owner, is understanding like, hey, you did tell me you could do bookkeeping. Is this something that you can still support? Because hey, is it maybe, maybe I need to pay extra for this service to make sure that it's being done? Like having that conversation, because then they should be able to honestly tell you, okay, fine, I don't have the ability to support it. Then you can go find a new person. But I would say don't box yourself in to feel like, man, it has to be this or that. A lot of companies like ours, we tend to be very open to, okay, if this is what your business needs, then we can add it on as a service for an extra price. So don't feel like you're boxed into whatever your bookkeeper's helping you with, because I think that conversation of the question of this is what I need versus what the bookkeeper or the accounting support can provide, you will start to see the gaps quickly, and then you'll be able to assess, okay, can you help me fill that gap? And if you can't help me fill that gap, then I need to find someone who can help me fill it, right? But if they can, maybe it's just a question of, okay, like they can help me fill the gap, but I just need to pay it more. And if you're willing to do that, then it solves your problem as long as they're delivering.
Absolutely. So before we wrap up, do want to hit the tax tea of the day. So
Yeah, this
is
one is gonna
the tax tea of the day.
All right, so this one is going to be quicker, but I did want to get something that was along the lines of accounting. So, the tax tea of the week is related to an accountant, okay, who was charged with tax evasion. He's going to be serving 1 year and 6 months in prison. This is a case actually from 2022, and the reason for
Oh,
his
wow.
tax evasion. Would you like to know what he did?
Yes.
Okay.
Tell me what this person did.
He did not report his income that he was stealing from a non-profit foundation that he was helping do the accounting for. So those are the charges.
Wow.
Yes. So so he's getting charged for this. So just to kind of put this into context. So this person, based in New Mexico, he was a partner in a CPA. He was a CPA, a partner in a CPA firm, so doing taxes for people. And for 5 years, he was a part of this foundation, an organization that basically issued scholarships to high school students. So they gave scholarships to high school students. I'm not sure if it was like what the basis of that was, but I think it was like high school graduates or something. For 5 years, he wrote himself checks to himself. For 5 years, he did the accounting. There was no audit, no oversight. He wrote himself about a total of $1.7 million in checks
Wow.
addressed to himself for I don't know what bogus stuff. So on that $1.7 million that he wrote to himself, he owed $630,000 of taxable taxes basically on that.
Wow.
And so so he was found out after 5 years. And so what he would do is just for context, he would then take the money that he was making from the partnership, from the CPA, but he would file that in his tax return because again, remember he was a partner at a CPA firm. He did his own taxes, and during filing his own taxes, he failed to include that $1.7 million of income that he wrote himself and stole from the high school scholarship fund. So yes.
Wow. I
Yes.
guess I mean, I'm just thinking about that as, let's say if you're a CPA at this firm
Listen.
and you're working at this firm and it's like the news comes out that one of your lead partners has just been arrested for tax evasion.
I mean, I feel bad because I think like when people do things like this, it's now a taint on the firm. Like, who's going to want to
Yeah.
work with a CPA? Who's going to work with a firm where and a partner is like someone who has partners typically have a share, right? A stake in the firm, like the ownership.
Yep.
Yeah. So this is
Hmm.
a partner, has an ownership in the firm. Basically, the firm is a representation of like the partners. And so now who is going to want to work and have an accountant prepare their taxes that works at a firm like this? So not only is it a bad reflection on him, but now he has cost the CPA firm that he was partner of, basically tainted their reputation. So yeah, and he has to pay all of the $630,000 back to the IRS, and he's been ordered to pay the restitution, basically pay the 1.7, $1.8 million that he stole over 5 years back. Not
You know,
good.
that is a very painful process because, or let me say, that is a very painful punishment. Now, I think it is justified, but I mean, if I'm hearing what you said is he has to pay the taxes on the money that he stole, and he has to pay the money back.
Yep,
to
that's what I'm
where-
reading. I'm like, let me go back and make sure I'm reading. Yeah. Ledford was ordered to pay restitution in the amount of $1.8 million to the Robert W. Hamilton Foundation and shall pay 629,289,000 to the IRS. So
oh
technically,
wow!
if I'm reading this correctly, he needs to pay a total of $2.4 million.
I mean, he better get to work. I mean, I don't think he'll ever get his CPA license back again, but he better find
Absolutely
something to
not.
do when he gets out of jail.
I'm like, I always wonder in cases like this. I feel like this was very sloppy because it doesn't even seem like he tried to hide it. You were writing checks to yourself as the
I mean,
designated accountant for the foundation.
I think it is unfortunately, I think what this firm may be subject to is they if I let's say if I were a business owner and this firm did my taxes, even if it wasn't that specific partner, I would definitely be filing some type of lawsuit because I now want to know, like, hey, every tax return that this firm has done for my
That's the
business,
problem.
you
Yeah.
guys need to go back, reevaluate it. If I ever get audited,
Mm,
then you guys are going to definitely be the first phone call that I make
yeah.
because you prepare my tax return. You guys signed it. I relied on your expertise. And
Mm,
now we got this situation. Like, this is like, I think about this as being this is a massive nightmare for the other partners in the firm because
yeah.
the other partners in the firm they had nothing to like this person's crime has nothing to do with the firm. It has
Exactly.
nothing to do with the work that this person did at the firm, but all of the work that the other partners have done are now going to be in question by clients and they now have to defend it to where I'm like, man, this is a nightmare for for the other partners in the firm who probably were doing the right thing, but just got in bed with a shady person and wow, man,
It's
that's bad.
unfortunate, but yes. So I thought that was a good toxie for this week, considering we're talking about advising this business owner on whether to dissolve her relationship. This is definitely one relationship that should have been dissolved quicker.
Yes, yes, absolutely. Yeah, the firm should have get to divorce this guy.
Yeah, yeah, yeah. Exactly, exactly.
So, thank you guys for tuning in. And just a recap, as we talked about, this business owner was feeling like she was in a loveless relationship with her accountant because the accountant only talked to her three, maybe two times a year. And it just felt like a very one sided relationship. So, my advice and the advice that Lola and I have given to help this person. And if you're a business owner and you feel like you're in that situation as well, where you only talk to your accountant like once or twice a year, my first thought is to have a conversation with them about the expectations.
Mhm.
Understand what they expect that they're supposed to do in this relationship and understand, let them know what your expectations are. And if the expectations do not align, then you probably need to look and say, hey, should this person only be my tax person and I need to go find a bookkeeper or I need to go find a bookkeeper who can do advisory or do I need to go find a CFO to fill those other gaps? And I think that if you approach it that way, you can then start to figure out like how to navigate this. Now, if you talk to the accountant and the accountant is saying like, yeah, we can do all those things, but they have never delivered on those, that's probably a relationship. I would say in that relationship, you can find another tax preparer, and you can find somebody else that's going to treat you and do you better. So thank you for tuning in. Until next time.